Welcome to Marcor Studios, where here we will be interviewing different industry professionals and educating our homeowners as well as the industry as a whole. We hope you enjoy the show. All right, welcome to Marcor Studios. My name is Gina. I'm here with Justin Oland from Oland Property Consultants. Justin is a public adjuster who we work hand in hand with. Justin, thank you for being here today.
Thank you for having me. This is very exciting.
So talk to us. What's a public adjuster? Not everybody knows.
The million-dollar question is, what do I do for a living? So basically, a public adjuster is an advocate for the insured when it comes to claims, whether it's a homeowner claim, a commercial claim, a business claim. The insured has the right to have their own representation, similar to if you were on trial and you had your attorney. A public adjuster is licensed by the state that they're practicing in to represent the insured as an expert in developing the claim, submitting the claim on their behalf, and ultimately negotiating a settlement in their favor versus in the insurance company's favor.
Well said.
Thank you.
So, there's a lot of misconception with public adjusters when you should call them, when they should get involved in a claim. Are they worthwhile to have? Can you kind of give us a little feedback on when is the right time for a homeowner or a property owner, in that matter, to contact a public adjuster?
Right. Ideally, we get called right at the beginning, right when the loss happens, even before you report the claim. Okay. That's, in our world, that's the best case scenario, because then what we can do is we can get a clear set of eyes right on the loss from the very, very beginning. We can advise you what steps to take as how to proceed with the claim, whether or not a public adjuster is even warranted, whether you need some sort of emergency services, and we're able to weed out the good emergency services from maybe some of the not so good emergency service companies, and really protect the homeowner's interest from the second it happens. That doesn't mean that we can't get involved after the fact or a week down the road or 2 weeks down the road. But in order for everything to go smoothly, usually if we get called in right away, it just makes it much simpler on everybody from the get-go.
Yeah. So what kind of losses do you experience most?
Honestly, it depends on the season. In the winter months, which we're coming out of now, I would say the majority of our losses are usually frozen pipes and pipe breaks. When you start getting into the summer months, especially in the last few years, we've experienced some, and I'm sure you've seen it, major windstorms. So you start dealing with a lot of storm losses, roof damage, and water infiltration from then. And then just like anything else, you really can't predict the fire loss, but they're 12 months a year all the time. So between that, it's primarily the main bulk of our losses. We do occasionally have the old vehicle decides to turn a business into a drive-through, even though it wasn't intended, and they end up in the lobby of a storefront. But primarily it's pipe breaks, fire losses, and weather-related incidences.
So, over the years, public adjusters have kind of gotten a bad rap. Why?
Right.
Explain to us, why that happens, that there's good public adjusters out there. Just like in any industry,
Sure.
There's good and there's bad.
Right.
But why have these public adjusters kind of been people be like, oh, you don't need us. I think now you need, first off, I don't think a public adjuster, that the profession should even exist. Because if insurance companies handle things the right way from the beginning, you don't even have a job.
Correct.
But we know that that's not what happens.
Right.
But there's also homeowners and property owners that take advantage of a claim.
Absolutely.
Which also is why the insurance companies are on the defense. But where are the things for a property owner to look out for to make sure that they are running a clean claim and not running into, dealing with somebody that's not guiding them properly, potentially?
Right. So I couldn't agree with you more with what you just said about, in theory, in a perfect world, public adjusting doesn't necessarily need to exist. the reality is public adjusters have been around since the mid 1800s for a reason. I think the first public adjuster in New York was, I think, in 1870s.
Really?
Yeah. So we are.
1870?
Yep. We are one of the oldest industries in the world.
Wow.
And in the country. As far as good public adjusters and bad public adjusters, it's like any other industry, like you said. There are good attorneys, there are bad attorneys, there's great contractors and poor contractors. Unfortunately, in the world of public adjusting and insurance as a whole, there is a tremendous amount of money being passed back and forth. And when there is a lot of money on the line and at risk and, potential to make a very good living for yourself, it changes and people take advantage of situations. I always tell people there is no more emotional moment in someone's life when they're standing there watching their house on fire and watching everything literally going up in flames, and you are at your most vulnerable. And unfortunately, in the public adjusting world and related industries, mitigation companies and all this, they have guys legitimately living in a room somewhere, listening to police scanners and fire scanners and hearing that, and they are rushing to the scene. And unfortunately, they take advantage.
Yeah.
And those are the kinds of people that, when you're watching your house on fire and someone's coming at you saying, whether I'm from the insurance company or I'm here to help, but I've seen some unbelievable things that, you wouldn't believe unless you saw it. People are at their most vulnerable, and they're going to sign anything they can or
thinking someone's going to help.
Right. Take any arm or any help or anything, any assist, and they're blindly signing it. And people in a lot of public adjusters will take advantage of that.
I ran into a situation. That's when I was, I still obviously have my public adjuster's license. I don't really have the time to really run claims. That's why I pass them all off to you.
And we appreciate it.
But, ultimately as a public adjuster, when I first met you years ago, fires were never something I ever touched. Simply because I didn't like the fact that, people were showing up and they were listening to the scanners and they're showing up the day of, at the time of the fire, like you just explained.
Yep.
And I just ethically can't imagine, all right, yeah, you want to help, but you have somebody whose house is literally, God forbid, burning down and they're losing everything that they have, and you're looking at a business opportunity. Right. To me, it's I guess I look at it from the business standpoint that all right, people, not everybody looks at it as an opportunity to help. And to, I just unfortunately faced a loss in my house, and it was a faulty, there was a defect on a
pot filler.
I was just telling you about it. So it was a mechanical failure, flooded the brand new kitchen, and it was a mess. And, fortunately, I knew how to mitigate damage, and I actually saved the kitchen. So I did the insurance company quite a favor. But we were already cooking, and the water filled up the stove and went into the stove while the stove was on. And when I opened the stove, flames and sparks were coming out of it already. So, of course, I get everyone out of the house. I call the fire department. When I tell you the fire department showed up, because obviously the house smelled of gas and everything like that, the fire department pulled out, the mitigation company rolled up.
Yep.
And knowing the business, I let them in just because I wanted to see what they were going to do. And this person came in my basement where majority of the water ended up, and it went through all the floor registers and through the HVAC and all of this, came in the basement with her moisture meter, and she's feeling the walls, and it's 9s across the board. So I know that there's water, but I also know how I built my house because I know what I'm doing. And I waterproofed my basement, and I put French drains in. And I knew that God forbid something like that ever happened, my basement's not going to flood. Right. So, she comes in and I said, yeah, I'm coming in this business. This is what I do. I said, but you know what? Honestly, mitigation, I don't really want to get involved in. And we were leaving I was leaving for a conference 3 days later. So I'm I don't really want to deal with this right now. I got to just open this up, dry it out. So maybe this is the right decision for me to just get this over with. But obviously I have other contacts in the industry. Right. I would have called them in. But I was just curious how she was going to handle it. So I said, well, how does this work? I don't know if I'm going to file a claim. I need to like figure out where this is going. And she's like, well, if you go through insurance, we'll get paid direct from the insurance company, but the price is going to be X.
Right.
But if you're going to pay out of pocket, it's going to be Y.
Yep.
And I said, but why? Why is it going to be different? And from a roofing standpoint, I know why. Because if I'm going to work for somebody from the insurance perspective, the insurance company, shockingly enough, in New York City, when I go to these like national conferences, and you have like these storm chasers that chase roofing,
right?
And storm damage, and they work with insurance companies. They're focusing so much on, hey, we want the insurance because retail we have to sell higher. And I always talk to them. I'm like, that's the complete opposite in our market. Insurance actually pays higher than the retail because in New York you have your labor law, you have different costs to do things. I mean, what we buy for shingles here is different in Ohio. So the cost of doing business in our softwares that we both use will be based off of, your geographical location. So in our case, I understand it's similar where if somebody's going through their insurance, I'm going to just go through what the insurance company is going to pay because it's not let's make a deal. I don't have to negotiate.
Right.
But from a mitigation standpoint, I was a little taken back because what the insurance company pays out is fair market value. And in New York, a roof is worth more fair market value from an insurance standpoint than it is for retail.
Right.
But on the mitigation side, what you're doing is the same thing no matter what. Why are you billing at a higher number? And you may say on the roofing side, it's the same thing. And I guess it kind of is. But at the same time, you're making sure that your codes are being met. You're making sure that certain things are being done. But, a fan or a DHU or, an air mover is not costing me more money if it's going to my insurance company or not. So why does that happen?
It's a lot of different things. For one, insurance companies have deeper pockets. So, and again, I really can't speak on behalf of every mitigation company, but from what I've seen, you're more likely to bill the insurance company on their software, which is called Xactimate, and it's a program that's subscribed generally across the board, and everyone puts in what they've done in the square footage, and it spits out a price, and that's what they submit. Real world, if you showed that to an insured, they would probably have a heart attack and be like, I can't afford this, and panic, which is why they are able to bill where they are, and insurance companies will pay for it. More and more what we're seeing now in the industry is insurance companies are sending nearly every mitigation bill out for third-party review. And these third-party review companies act almost like henchmen for the insurance companies and will cut bills and cut bills and cut bills. So now mitigation companies, let's say a mitigation company feels that their fair work was $5,000. If they bill $5,000, there is no way on the planet Earth the insurance company is going to pay them $5,000. And it circles back to if insurance companies just did the right thing from day one and paid the fair market, none of this happens. But
nobody inflates a bill and then has to negotiate it.
And that's exactly what it is. So now they've got to cut. So now they've got to push their bills up. And it's really kind of a ridiculous song and dance that everyone goes through, but it's almost accepted across the board. Why they're charging insurance companies more than the insured, the insureds don't have the deep pockets. So if they want the job, they're going to have to be more aggressive. And maybe that 30 or 40% profit margin, they're fine with a 15% profit margin when it's a direct to consumer. That's my best guess as to why it is that way. But even on rebuilds, like we know right now, the insurance industry standard, roofing is a favorable number. But when it comes to the intricacies of a claim inside the house, every insurance company makes their own rules. One insurance company pays for one coat of paint. One insurance company pays 2 coats of paint. I mean, when you're painting a wall, I don't care if it's a patch job or not, you always prime it. You're going to put at least 2 coats of paint. Well, one of the majority of the big box insurance companies, the ones that you see advertising when you're watching TV, they have decided, because there's people in a boardroom somewhere that go, you know what, if we across the board just make it a rule, not that it's in writing anywhere, that we only pay 1 coat of paint, Well, across the board on a national level, we're going to save hundreds of millions of dollars a year. So they go out, we only pay one coat of paint. And it's not fair, it's not right. And that's why you have these discrepancies with the way claims are handled. And unfortunately, to the insured, they're left with no option. And if a public adjuster isn't advocating and fighting for them, then they're like, well, all right, I guess I only get one coat of paint. And then when they hire the painter, he's like, well, we need two coats of paint. It's like, well, I only got this. Well, painter's like, well, then I'm not doing the job.
Yeah, or you got to come out of pocket.
Right.
It was interesting going through the process myself because I actually have been kind of disconnected from the insurance industry. We haven't really had a storm recently, which we are long overdue for. But, I handled it as a homeowner, not a public adjuster.
Right.
And I handled it as, I need to bring this back to pre-loss condition in my own house, right? So I'm going through it, and the initial offer was actually a quarter of what I have them up to right now.
Oh, yeah.
And I'm still not done because I'm going to have them probably 6x what they initially offered. But the reason, and it's not because I beat them up, it's because I knew what they owed for and I knew what needed to actually be done.
Right.
For example, they wanted to pay for 300 square feet of flooring. When I have continuous wood floors throughout my house, they can't just do 300 square feet of refinishing my floors. They have to refinish all of it. And if there's a poly on it, they have to pay the poly. And if it's a 2-part stain, they need to pay for 2-part stain. But most homeowners don't know that, which is where you come into play, or somebody like myself comes into play. And that's really unfortunate. Like I said, people like us, I tell people all the time, I shouldn't have to help you with this. And, people like us shouldn't have to exist, but unfortunately we do.
Yep.
But now, fortunately for the homeowner or the property owner, we do.
We do exist.
Right. And so talk to me about when it comes to filing and claims, a couple of homeowner or property owner concerns are, one, can I lose my deductible?
Right. As far as...
Contractor says, I'll come in, I'll waive your deductible.
Okay.
Is that legal?
No. Well, so, I mean, and here's where it kind of goes. So every insurance company has a deductible, and and that's in theory when you're taking a contract out with your insurance company, that is what you're agreeing to, and based on your premium and how they structure your claim, that's what your portion of the loss is, and that's what you're agreeing to. The insurance company, and whether I'm involved or whether it's just working with it, the consumer right to the insurance company, they're going to settle a loss based on what they feel the total damages are. Now, insurance policies are written so that you are not supposed to profit, you're supposed to be made whole. And that's what you're entitled to, including your deductible. The insurance company can't dictate how you want to spend your money. They can only reimburse you and compensate you for what you've lost. Now, if you decide that you want, during the rebuild, you had granite countertops, and you decide to go maybe step down to like a quartz or whatever, and you're going to save money that way, you're well within your right to do that. The flip side is if you had a linoleum countertop and you want to improve to granite, you are well allowed to spend above and beyond what the insurance company gives you. It's really up to what you want to do. I always tell people, listen, I'm very good at getting you your money. I'm not here to spend your money. You can do whatever you want. Now, a lot of the policies, unless you have your top level policies, have what's called a recoverable depreciation. What a recoverable depreciation means is you have the right to collect up to your be totally compensated for what your loss value is on a replacement cost, which is what it's actually going to cost you at the time of loss to put back what you had. But unless everything is brand new and it's worn or used, there's some wear and tear, they apply what's called depreciation. Depreciation means they're going to hold back a certain amount of money based on what they felt the actual cash value of that item is at the time of loss. And the easiest example I always use is everyone buys an iPhone, it's $2,000 out of the box. A year later, that same iPhone's only worth $1,200. The insurance company will give you $1,200 up front. You can take that $1,200 and buy an older iPhone, or you can go buy the newest one, spend $2,000. When you spend that $2,000 at $800 that the insurance company held back or depreciated, you're entitled to collect back once you demonstrate that you spent that money. So in order to collect that, you do have to spend the allocated dollars that the insurance company has agreed to. If you aren't able to spend that much, then you aren't able to recoup your, and that includes demonstrating that you did spend your deductible, because that's your partnership on it. More often than not, most people, and again, it depends on everyone's financial situation, but at the end of the day, once the initial shock of the loss happens, a lot of people will take this as an opportunity to go, you know what? I really wanted to make these repairs or maybe make a few improvements. Maybe it pushed up your timeline a little bit, but most people will ultimately take the money that the insurance company is going to give them, and then go above and beyond.
Well, I mean, on the roofing side, like that's probably a really good example, because it's like one cumbersome type of thing, right? So a roof, let's say the insurance company comes in and they say that this roof is worth $15,000.
Right.
But Chuck off the truck's willing to do it for 11. What most homeowners don't realize is that if you do it for 11, you're not, and your roof is 20 years old, they're going to depreciate that. They might have only given you 9 up front.
Correct.
And said, we're going to give you the other 7 on the back end.
Right.
And when you get that 9, now you have to show them that you spent 15 in order to get that extra 7 or whatever math. I'm probably
right.
60, my $16,000 roof, right?
Yep.
So you're gonna not get that recoverable depreciation, and then a lot of people say, oh well, the insurance company already took the deductible out. No, they're expecting you to put that back into the pot, because now if you have, let's say, that $16,000 roof, and now they only paid out, they took $1,000, and then they took the depreciation. Right. That was where my 1,000 was missing in my head.
There you go.
But now you've got, you've got to show that you paid that full amount of what they said they gave you, including your deductible. Your deductible is still expected to be paid.
Correct.
The insurance company is just making sure they get that deductible, that they're not giving it to you because they're not going to ever get it back.
Right.
So they're holding that portion back, which makes sense. But that's why a lot of homeowners think, oh, well, I don't have to pay my deductible. They already took my deductible. They're expecting you to put that back into the pot.
Correct.
To make that whole. If you say, okay, well, it was a $16,000 roof, but they only gave me 15 because they took $1,000 deductible, and then they took depreciation. Now I got to show them 15,000. Nope. Now they're going to give you only 6,000 in that depreciation, not the 7.
Correct.
So this is where a lot of homeowners get themselves into trouble, because you cannot profit off of an insurance claim.
Right.
Yes, you can make the improvements like you said and things like that. You can upgrade things. Right. And if somebody wants to, for right now, somebody comes in and they have, let's say a 3-tab shingle, that's a 25-year warranty. That's what the insurance company is going to pay for. But me as a contractor, I'm just going to upgrade them to a 50-year shingle, and I'm not charging them the delta. Right. Because it just is it's a benefit for everybody, right?
Correct.
But a lot of contractors out there do, and they say, hey, listen, that you want that shingle, it's going to cost you another $2,500. Write a check for that. So one last question is, a lot of the times property owners are scared to file a claim, and now more than ever, because of the big question, am I going to get dropped because I filed a claim? What is your take on that?
So, yep, I get that all the time. That's one of the first questions that a lot of homeowners, commercial business owners is, am I going to get dropped? What's going to happen to my premiums? And, should I file a claim? I always tell people, and I'm upfront and honest. I mean, the first thing, we'll go and look at any loss, whether it's the smallest of losses, the largest of losses, and we'll fairly assess it and let people know whether or not the loss even needs a public adjuster. And if not, we're happy to give. And when I say we, it's me and my father. We're happy to give as much free advice when that happens. New York state law, and I'm assuming I'm licensed in, I think, 13 or 14 states right now. And they're all, yeah. You're not supposed to be punished because, in theory, you're paying for your product. You're paying for the product of insurance. That is something that you're paying for, and that...
It's a contract.
Right.
Hey, I'm going to pay you. You're going to pay out if something happens.
Right. So how can you be punished for using something that you pay for? It's one of the craziest oxymorons in the industry, and people are scared to death. Now, the reality is, while they can't punish you and drop you for using the insurance, they can raise premiums. A lot of times you'll hear, like you'll see on TV or whatever, the good neighbor discount or the good driver discount. And what happens is when you file a claim, you lose your good discount, your 10% off. So your premiums could get affected. Now what we're finding in the industry is the adjusters that are there, are now reporting back to the carriers, and they're giving them information on additional risks that will allow a insurance company to
find a reason to drop.
Either drop you, or, and especially with roofs, I'm seeing it all the time now.
Oh, yeah.
It could be like a basement or a pipe break in a bathroom. And next thing you know, a month later, the insurer is getting a letter saying, we have determined that your roof is beyond its life expectancy.
Or they see that solar panels went up and
Right.
that, and the roof's 20 years and they don't want the liability.
Yeah,
And that I don't blame them for.
Yeah. And if you do not, or what'll happen is if you do not make these repairs, you have 2 months to make these repairs. We're either going to drop you, we're going to remove your roofing cover, whatever it is. We're seeing a lot of that. Listen, at the end of the day, I always tell people, your financial situation. And if you are in a spot where your home, which is the most important thing on the planet Earth that you have besides your family, is your home, you need a place to put your head at night. And if that's affected and you have insurance and you don't have the means to avoid a claim, you put in the claim, and whatever ultimately happens a year, they're not going to drop you the next day. Could it happen in the next billing cycle? Sure. Could it happen 2 years from now? Sure.
But it can happen whether you file the claim or not.
Right. I mean, we're hearing all the time, a lot of carriers are pulling out of the Long Island, New York market. It's too much of a risk. And at the end of the day, you need a home and you've got to make the repairs, and you can't put yourself into financial constraints or, maxing out credit cards because you're afraid that the claim is going to cost you your insurance. New York State has a law. You have to be put into an assigned risk category no matter what. You can't just go to market and no one's going to write you and well, I guess I'm stuck. Ultimately, it may not be the best insurance, but you will be able to find a policy. It may not be the cheapest, but you will be able to find a policy. And then, every 6 months, every year, you go back, you find a really good broker, and they'll shop the market for you. And eventually you'll work yourself back into a little bit more of a comfortable insurance policy. But at the end of the day, you're still going home to your house that was repaired, and you're not living, hopefully not paycheck to paycheck or really struggling and worried about it. You have to do what's necessary. So
what I tell people is I did it actually myself too, is I increased what my deductible was. So you bring your premiums down,
Sure.
but it discourages you to file
a claim.
Little claims, and in the long term, it makes sense. You bump from maybe 1,000 to 2,500.
Right.
It does save you in the premiums over the years. At the end of the day, if your savings, God willing, you don't have a loss, but if you do have a loss, you're not going to go file a $5,000 loss. You're going to file a $25,000 and up kind of loss.
Correct.
Make it worthwhile.
Right.
So.
And then you find a good public adjuster that will help you increase the claim settlements. And
The reality is, I think I'm the only public adjuster out here that'll take anything $50,000 and under.
Right. No, I mean, we do. And usually our threshold is, I usually tell people a $10,000 loss and under, you really don't need a public adjuster. If you need help trying to find reputable people to put your house back together and kind of guide you, I can always assist you. Right. And call Marcor. But anything over 10, I mean, a lot of times people repeat clients of mine, it's it could be a $15,000 loss.
Yeah.
And it's not that they necessarily need me, but they've got 2 kids and 2 jobs, and they're running back, and they just don't have the time to handle the meetings because insurance companies will say, okay, we're coming at Tuesday at 10 o'clock. And well, I can't. I'm a teacher. I can't be there Tuesday at 10 o'clock. Well, that's my job. I'm 24/7, 365. one of my first claims when me and my father started our own company, we were about to sit down for my birthday dinner. And one of our first claims at the new company, about 10 minutes before we sit down, the phone rings. And I'm running to Queens for a fire loss.
I remember that.
Yeah. And they had a great birthday dinner for me without me. And that's what we do. Yeah. So, it's one of those things where I never look at a dollar amount and will ever say a claim is beneath me. If someone needs my help, someone needs my help. And we're more than happy to do it. Not all claims necessarily need a public adjuster, but even on the ones that we don't need they don't necessarily need me on a professional basis, my number's always there. They can always text me. They can always call me. Hey, listen, the adjuster said this. I don't really know if this made sense or not. I mean, who's the adjuster? Okay, I know. It's a very small world. And sometimes I'll just tell the people, listen, just name drop me. The adjuster knows me. He happens to be a good dude, or she's really cool, Just tell her this, and this. She's going to want to know where you heard that from. Give her my name. And sometimes the claims go smoothly. So, yeah, I mean, claims show up anytime. And, the dollars, listen, if it's a $15,000 claim, we're going to work as hard on it as we will a $10 million claim, because it's still someone's home. It's still someone's property. Trusting us to help them.
Yep.
And they deserve the best regardless of the loans, of the loss size.
Well, I really appreciate you being here. And if anyone does want to reach out to you, how do they do that?
So you can always call us. My office line is 516-822-9793. It's myself and my father, who's been a public adjuster for 50 years now.
I was like, wasn't he like one of the first 5 people to have a PA license in New York?
We always joke that one of his good friends was Harry Peters was PA license number 0002, and my dad is 0004, and he will kill me when he hears this. I'm later on down the road. I've been doing this a little over 10 years, but you can always call us on our cell phones, or just go to our website, which is www.olandplc.com. That's OLAND and they have our cell phones, our emails. We have Facebook, LinkedIn, all that good stuff. So we're not that hard to find.
Yeah, next time, you left me high and dry this past year on CEUs. Dr. Chuki usually does our CEUs together, and I was on my own this one. You didn't remind me this year, and I almost missed it.
Really? I thought, I don't know about that. I think you got to check your texts. I renew the same as you. I renew right when you do. Right. It's all right. In 2 years from now, you can remind me again. Make sure. We'll make sure to take it.
Well, thank you again. I really appreciate it, and this was very helpful.